Hi, welcome to Digging to China. I'm Dang Sheng. Reports suggest that China is accumulating reserves of gold and a variety of strategic commodities such as oil, nickel, copper, and iron ore. What could be the motive behind this accumulation? Gold, traditionally seen as a stable and a genuine form of currency, serves as a hedge against inflation and can also be a preparation for potential conflicts or disruptions. Similarly, oil is considered a strategic asset, while metals like nickel, copper, and iron ore are fundamental for industry and hold strategic importance. So, what drives China's accumulation of these resources? Is it preparing for potential conflicts, or is it anticipating a significant global financial shift? Let's review some recent reports. According to British newspaper The Daily Telegraph, China has embarked on a fervent spree of purchasing gold since October 2022, accumulating hundreds of tons of gold reserves in the past 18 months. How significant is this accumulation? To put it in perspective, China's gold reserves during the pre-financial crisis period from 2003 to 2008 were only around 600 tons. The recent increase in gold reserves over the past year and a half matches the total reserves held from 2003 to 2008, indicating China's resolute commitment to bolstering its gold holdings. Additionally, the chief strategist for financial investment at the Nordic Bank noted on social media that China is also amassing various commodities including oil, nickel, copper, and iron ore. These two reports indicate that China's efforts extend beyond accumulating gold and oil. They also involve substantial stockpiling of materials such as nickel, copper, and iron ore. For decades, analysts and strategists worldwide have largely centered their attention on the United States, closely monitoring its actions due to their profound impact on global financial markets. However, it's imperative now to also shift focus towards China. As a major player approaching superpower status, China's influence spans across economic, trade, financial, and global geopolitical spheres. Presently, the United States and China are in a state of mutual distrust. Continuous actions by the United States and its allies in the Taiwan Strait aimed at confronting provocations from the Chinese Communist Party have made the region unstable, with the potential for conflict to erupt at any time. Additionally, China may be pushing forward with its process of reunification with Taiwan, which could lead to warfare against the island. These factors all contribute to the likelihood of conflict escalation and the ignition of hostilities. This time around, the situation is especially intriguing because of the extensive range of commodities China is accumulating, spanning from gold and oil to essential metals, all of which are strategic resources. Reports also suggest China is contemplating reserves of food and industrial materials. Beyond meeting domestic demands, these stockpiles hint at the potential scenarios including geopolitical tensions, a resurgence of global inflation, or a substantial depreciation of the US dollar. Which scenario will materialize remains uncertain. Let's begin with the topic of gold. As reported by the British newspaper The Daily Telegraph, China embarked on a gold buying spree starting in October 2022. There is also considerable chatter on Chinese online platforms advising the Chinese Communist Party to swiftly sell off US dollars assets and amass significant reserves of gold. It's noteworthy that China's gold reserves from 2003 to 2008 were strikingly low, totaling just 600 tons, a figure that doesn't align with the substantial economic stature. Not only does this amount lag behind the gold reserves of the United States, but it also falls short of those held by other major central banks globally. However, the financial crisis ignited by the United States in 2008 left a profound impact on numerous countries, prompting them to rethink their gold reserves. Some even contemplated the retrieval of gold previously deposited in the Federal Reserve Bank of New York. While many nations shared this sense of urgency, it's not as straightforward as merely deciding to increase gold purchases or requesting the return of gold from the United States. The annual global production of gold is inherently limited. When numerous countries aim to bolster their gold reserves, the international gold market lacks a surplus gold necessary for central banks to make purchases. Thus, while the logic behind increasing gold reserves is clear, it's not as easily achievable as one might think. Once China initiates substantial gold acquisitions, the inevitable result is a sharp surge in gold prices. During those years, any international purchases made by China, be it oil, copper, nickel, iron ore, corn, soybeans, or other commodities, led to across-the-board price hikes. Moreover, international hedge funds have their eyes fixed on China. Whenever China shows interest in a commodity, these funds rush in to speculate heavily. If China were to make substantial gold purchases, it wouldn't just trigger a significant surge in gold prices. It would also attract aggressive speculation from hedge funds. Additionally, the United States would take notice. They might interpret China's large-scale gold acquisitions as a threat to the global dominance of the US dollar. This could lead to confrontations with the US. Hence, China must discreetly expand its gold acquisitions or intensify its domestic mining activities. For years, China has held the position of the world's largest gold producer, largely due to its significant mining operations within the country. Reflecting on the numbers, in 2022, global gold mine production amounted to 3,627 tons, with China, Australia, and Russia collectively contributing 1/3 of the global output. China stands out as the leading gold-producing nation, contributing roughly 11% of the global total in 2022, followed closely by Australia and Russia, each contributing approximately 10%. However, China is also a major consumer of gold worldwide, encompassing both individual and industrial usage. Therefore, whether through gold imports or domestic production, a certain proportion of gold is allocated for consumption rather than solely reserved as reserves. According to the latest data, China's gold reserves amount to 2,235 tons. From 2008 to 2023, China's gold reserves grew from around 600 tons to 2,235 tons, averaging an annual increase of 109 tons. These figures suggest that despite China's efforts in gold mining and international procurement, the rate of increase remains relatively constrained. Through history, gold has remained a unique form of hard currency, unchanged and enduring. However, nations globally prefer to reserve US dollars over gold for several key reasons. Firstly, the US dollar stands out as one of the most extensively utilized currencies worldwide, renowned for its exceptional liquidity. Practically every nation relies on the dollar for international trade and financial transactions. In contrast, although gold holds inherent value, it lacks the same level of ease in trading and usability as the US dollar. Secondly, while the value of the US dollar fluctuates in response to economic shifts over time, it's generally regarded as relatively stable compared to other currencies. Thirdly, the economic and financial prowess of the United States is a crucial factor. As the world's largest economy, the US possesses highly sophisticated financial markets and banking systems. Due to its predominant position in the global economic and financial landscape, other nations prefer holding US dollars assets to maintain stability and confidence in the US economy and the financial sectors. Fourthly, the international prominence of the US dollar is significant. It has been a primary international reserve currency for several decades. Most international trade, energy transactions, and global financial activities are conducted in dollars. This status makes other countries more willing to hold US dollar assets, facilitating smoother international transactions and payments. Even Warren Buffett echoes this sentiment, stating that gold doesn't generate interest or offer investment returns. However, in recent years, the Chinese Communist Party has been actively pursuing de-dollarization and advocating for the internationalization of the Chinese yuan as a challenge to the supremacy of the US dollar. Regardless of whether it's driven by concerns about inflation, the need for diversification in foreign exchange reserves, or a potential decline in the value of the US dollar, China is expected to continue increasing its gold holdings in the future. If we project based on China's historical pace of gold accumulation, even over the next 15 years, it might only add another 1,600 tons of gold. By then, China's total gold reserves would still only amount to around 3,800 tons, which is comparable to the current level of Germany's gold reserves. Looking at Germany's gold reserves, it's clear that Germany is experienced in this realm, being a long-standing major power that has weathered 2 world wars and understands the necessity of maintaining substantial gold reserves. However, the United States is even more adept in this area, with reserves exceeding 8,000 tons and serving as the custodian of gold reserves for many other countries. In addition to gold, the Chinese Communist Party is also accumulating strategic commodities, including grains. This serves multiple purposes, not only as a hedge against inflation and the potential depreciation of the US dollar, but also as preparation for potential geopolitical conflicts. From the CCP's perspective, the current involvement of the United States in the Ukraine war and ongoing conflict between Israel and Hamas diverts its attention away from East Asia, presenting strategic opportunities for China. For the CCP, the real vulnerabilities lies in areas such as the Taiwan Strait, the Korean Peninsula, the East China Sea, and the South China Sea. Therefore, the accumulation of strategic commodities like grains is part of China's comprehensive strategy to address potential challenges in these geopolitical flashpoints. While the Korean Peninsula is indeed a potential hotspot in East Asia, North Korea's possession of nuclear weapons might deter the United States from engaging in conflict there. Any outbreak of war on the Korean Peninsula would likely be a proxy conflict, potentially sparing direct involvement from China. Therefore, the Chinese Communist Party is primarily concerned about tensions in the Taiwan Strait, which could serve as a flashpoint for a potential showdown between China and the United States. In the event of conflicts in the Taiwan Strait, the United States would likely adopt a strategy akin to its response to the Ukraine war, rallying its allies to impose sanctions on China. So the question arises, is the Taiwan Strait conflict imminent or approaching? In 2022, the US military proposed a theory suggesting that Xi Jinping might take military action against Taiwan by 2027, aiming for reunification by force. That same year, the United States passed the National Defense Authorization Act, allocating $10 billion in military aid to Taiwan over 5 years. This legislation explicitly points to the time frame of 2027. Considering these projections for 2027 or 2028, wouldn't it be opportune for the CCP to make preparations or stockpile strategic resource? In the past 2 to 3 years, the United States has been actively involved in selling weapons to Taiwan and supplying military equipment. Additionally, they've deployed military instructors to Taiwan to train its armed forces, all with an eye on the year 2027. Naturally, China will take corresponding measures in response to these developments. Both the US and China are gearing up in anticipation of the approaching day. However, the presence of certain indicators of action from China doesn't necessarily signify that the timing is imminent. What is clear is that both the US and China are making preparations for the anticipated day. It's just that the US's preparations are more overt, while China's action often remain veiled. While we observe China stockpiling gold, grains, and other strategic resources, we remain unaware of when they might conduct the test flights of the H-20 bomber or equip their strategic nuclear submarines. Nonetheless, if China is amassing strategic resources, it can be inferred that they are also quietly undertaking other military preparations. There is a common saying that goes, when the United States sneezes, the world catches a cold. Now that China has been labeled as the primary strategic adversary by the US, every action from China is under intense scrutiny. If China sneezes, the rest of the world may catch a cold too. This year marks a significant shift in US-China relations, coinciding with the US presidential election. Both sides of the political spectrum in the US are preparing for the potential return of Trump to power, while China is also making its own preparations. As a result, discussions surrounding US-China relations are expected to become increasingly prominent in the near future. Thank you for watching. Please like, leave a comment, and subscribe to my channel. Just click the subscribe button right here. I'll see you again shortly. Until then, be well.